Is the relief rally over, or is this just the next high low before a major run up? Well, we're going to address that on today's show. And it has been a while. I had to take Friday off for school, so I do apologize. But nevertheless, let's get straight into it. You can see over here by the crypto bubbles chart, again, a lot of resilient altcoins bouncing really strong on the hourly chart off of yesterday's recent sell-off. The daily, most coins are still holding up nice and strong. And this is really a game of liquidity. And I'm going to show you why in a few moments' time. But important economic data events that are coming up this week. We do have the US economic data, which is going to be durable goods orders, which is today. Pending home sales also coming out today. CB consumer confidence on Tuesday. ISM manufacturing PMI on Wednesday. Now, this is a very important one to show you whether the markets are going through a contraction or expansion phase. So do keep an eye out on that one. We will cover it on Wednesday's show. Then we have vehicle sales on Wednesday, jobless claims on Thursday, another important one to focus on. And then again on Friday, ISM services PMI. So those are the ones that we'll be focusing on this week. It looks like Wednesday and Friday are going to be the most important days economically. And if you look at historically, the biggest moves actually take place around Wednesday, Thursday on the week. So keep an eye out on them on those particular days. And if you look at this tweet from 𝗕𝗏𝗃𝗍, he says, some early real-time indicators that data will remain hot through Feb, but then start to weaken again in March. It sets up for potential macro alleviation in about a month's time. So the month of March. So what that basically means is you can expect that potentially the selling will continue throughout the month of February, and then March will be that final opportunity of accumulation. And I like this chart that Kevin has shown over here. He's basically got Bitcoin running up back into that 25,223 resistance area, which is that triple resistance between the 50 moving average, the 200 moving average, and a strong horizontal level of support. And then he's showing failure from that level and looking at things seasonally. He says seasonality by month, February is more likely to close in positive territory than it is to close in negative territory. And then he says March is more likely to close in negative territory based on seasonality. April is the second most bullish month in Bitcoin's history. So there you have it. There's all the data. Red months are basically the bad months, and the ones outlined in blue have been historically good. So most of the months, most of the years that you had, March was red, and April was mostly a green month. So in line with what we're kind of seeing, that maybe if the Wyckoff accumulation pattern is playing out as a schematic one, it would essentially denote that there is a possibility of coming all the way back down into the range, potentially even towards the range lows, which would be as low as 18K. Now, I don't have that level in sight, but it is something to consider. If that does happen, then in line with this, March could potentially be a great month to accumulate. And you can see based on CME Group over here that the interest rate raise is now pricing in a 50 basis point hike with 27.7% probability at the moment, and this number keeps increasing each and every day. That is going to be coming up on the 22nd of March at the next Fed meeting. So you probably want to mark that off as well on your calendar. March could be the month of accumulation, but it's all driven by liquidity. And TED Talks Macro shows over here that the global liquidity has projected to rise in 2023, but recently it's pulled back. China did inject that 450 billion into money markets during December and January. And then US liquidity has flatlined. Government liquidity has outpaced the Fed quantitative tightening recently. And then he just says, yeah, markets are a product of liquidity or risk appetite. So any resources that you can get your hands on which focus on liquidity, I recommend looking at, and especially over the next couple of months, because if you are going to get an opportunity to accumulate near the lows again, it's going to probably happen within the next couple of weeks to months. And that will all be driven by liquidity. So contrary to popular belief, a lot of people think, well, the liquidity just evaporates. It doesn't really. Liquidity just moves from one place to the next. And basically, it means that that money is sidelined. And when it does return, it will probably create violent upside moves. So Jordan shows over here, many people are still underestimating the significant amount of liquidity in today's market. Currently, there's 2.2 trillion in excessive liquidity held overnight at the Fed, which has been accumulated as part of the Fed's efforts to tighten the market. However, once this liquidity is eventually released back into the market, it could have a massive impact, potentially creating a tidal wave of activity and volatility. As investors and traders, it's crucial to keep an eye on this situation and be prepared for any potential outcomes. Again, keep your eye on the liquidity, because once the liquidity comes back, it will be violent and towards the upside. And Fabian, I like his analysis here. He says thoughts are largely unchanged going into the new week. In short, markets are in slight de-risking period after multiple data prints came in hotter than expected all month and triggered a repricing across the terminal rates, the yield curve, and the dollar. And then he says, not to mention, there was an uptick in the reverse repo facility of over 100 billion in USD in February, indicating that net liquidity is being sucked back out of the system after moving the opposite way for all of January. So all you need to do is look at the liquidity and you'll basically know which way the market is going to go. He says clear macro pressures at work and the markets responded accordingly. Equities had their first major correction since mid-December, with growth and cyclicals leading the way. Textbook risk-off reaction, but what is done is done. The real question now is whether this signals a shift in trend across asset markets, or just some minor turbulence. And then he shows here with the SPY, he says there are a few silver linings that will provide us support this week. First, the SPY is at major support area, resting at both the upper bound of its multi-month trend line as well as its 200-day MA. And I will say that I'll show you on my chart with regards to the stock market, the S&P 500 and the futures chart. The level that we're at now is absolutely critical. Basically, anything above current levels is support, and you'll basically be looking to bid that region with an easy invalidation below, and technically giving bulls the edge. Anything below those levels and it becomes extremely bearish very, very, very quickly, because then you lose that support and that could flip into major resistance. So I think I'll leave it at that. He's got a whole thread here. If you do want to go through it in your own time, feel free to. But Gavin also says over here that Warren Buffett's Berkshire Hathaway now has over $128 billion in cash. What stocks should they buy? Elon says it starts with a T. But in all seriousness, these guys are sidelined. A lot of them are sidelined, and they will be looking for opportunities to get into the market. And it's probably going to be driven by when you see an uptick in the liquidity. When the liquidity moves up, they'll have no choice but to put it into the markets and put that to work. And consequently, you can see the accumulation phases that have been taking place within Bitcoin. The monthly chart is still looking strong, with the RSI recapturing above that 43.53 level, the horizontal dashed yellow line, which has been an important level, giving back bulls some level of edge, which means that if they can just hold this momentum sideways and not crash down, basically, or they don't need to rally it straight up, but if they can just hold it sideways over here, it will give these RSIs a chance to get into a healthy zone, as well as a stochastic RSI, and that could give the potential for further upside momentum. And you need to ask yourself, where are you within the entire market cycle for crypto? And if you look at this over here, I have the Heikin-Ashi candlesticks on, and I do have it on log scale just to give you the perspective of the market cycles. And you can see the way that it typically works, right? You go through a range, an uptrend, a downtrend, a range, an uptrend, a downtrend, a range. Uptrend, this one went straight into a range because of COVID. Then we got our next uptrend, downtrend, and now I put a big question mark over there, because are you looking for a range or a trend over here? That is the big question. Was this enough of a range to start to break out and form the new trend, or will this range continue? If you can answer that question successfully, you'll know what to do with your assets. So that is the important thing. I think that to at least say that over the next couple of months, we may still range a little bit more, means that you can put your dollar cost averaging to work, which is exactly what I've done. If you do take a look at this over here, this is essentially what I've shown as my dollar cost average bots, which is why I've just been buying and buying and buying over here. Not massive amounts. This is just my dollar cost average portfolio, not my main portfolio. So currently a little bit down, but that's okay. I expect following this dollar cost average strategy, I should not experience any more than about a 10% drawdown at the absolute worst. which is okay. And I'm looking to capitalize on this range. If it does form a new low over there, or at least retest near the lows, I plan on buying all of that up, and then I'll enter my main spot positions again if it gets there. Remember, I am still in spot positions because I bought a 21.5, and I'll show you what I've done with those positions shortly. So okay, here we have it. The triple resistance, you know what you're working with. You need to clear above that. If bulls want to hold on tight over here, the best thing they can do is just hold price running sideways. Bears will obviously want this to be a major rejection and for price to break below this 21 exponential moving average, which is currently coming in at 21,300. So as soon as you start to see any closes below that, it becomes catastrophic very, very quickly, and you can expect much lower prices, possibly all the way down towards the range low. But for the time being, we definitely have to treat it more as a range than a trend, with the potential of that range breaking and a new trend forming. So looking at the volatility again, the Bitcoin volatility divided by the volatility of the S&P 500, which is the VIX, very, very low levels. The last time that we saw these levels was all the way back in November of 2020. And then again, if you look over here, July of 2020, and then it's the same level that we saw in October of 2018. And these were all just before the next major move. So we've been contracting for quite some time. What I find interesting is we revisiting those levels near December. Now, this might give some of you a second opportunity. For those of you who may remember what I said to you, one way that you can identify the lows, because a lot of people say that, well, there's no way of knowing that the low is going to be at, let's say, 15.5, 16K. How would you know to bid that area? Well, one way that you can, the one indicator that you can use is this, the Bitcoin volatility divided by the VIX, or you can look at the BBWP as another one that I like to use. Shout out to Eric Crown. He was the one that brought that to my attention. When you see that volatility indicator contracting to extremely low levels and the crypto market is in backwardation. What does backwardation mean? Backwardation simply means that the future price of crypto is, or Bitcoin, is cheaper than the current spot price of Bitcoin. When you see prolonged periods of backwardation with extremely low periods of volatility, and you can also mark that off simply by price action trading, where you're just stuck between a range, between two horizontals for a long period of time, that usually indicates that a reversal is possible. Then you kind of want to be looking for opportunities to go long, because most people are on the short side, heavy shorts coming into the market, and then a drop in open interest, and then that's your signal. That's your signal to look for long. So keep that in mind. Go back to those videos that I made. I think it was around the 27th of December. I think I covered it in that video. That is a possibility of something that could take place. Okay, simply put over here, we are definitely still stuck within a range. You can see the top boundary of the range over here. So the ceiling at about 25,000. And then you have your mid-range coming in at 20,960. And then your range low is going to be at 17,400. And you have currently a cross between the 12 and the 24 exponential moving average. So that is one good sign. If you do see price pull back into that, and as long as these can hold, so as long as these EMAs can hold and they just slowly start to move sideways like that, this could form a really, really nice accumulation zone where you get into one of those tight wedges. So trend line into a triangle, and then at a later stage, that could lead to a breakout. So that's one thing I'm keeping an eye on. But ultimately, yes, price stuck below the yearly high at 24,258 means we've broken back into the range. It's currently still range bound until proven otherwise. Okay, the stock market, very, very key and important levels. So number one, just focus on the dash line. I'll clean it up and make it neat for you now. Dash line that's coming down over there, that marked, let's make it big because some of you on mobile may not see that. There we go. Okay. That one over there. So that has governed all the lower highs for the stock market. We obviously broke above that. You kind of want to see that region flipped into support now. So zooming in, now that you have a line of sight on that, you can see why this is such a critical area, right? You have the range highs. We rejected off there. We came back down. We broke the momentum trend line, which is now useless to us. That's a warning signal showing you that, well, pay attention. You now have to hold the mid-range. So that's the wrong one. Let's just quickly delete that. Okay, delete that. So you now know that this is not yet a convincing high low. This level needs to hold. You have the 200-day moving average, which price is currently wicked off. As long as you don't break below the mid-range and this downtrending trend line, the dashed one over there, then it should be okay. This is your area of interest, and I'm going to draw a circle around it. Bulls need to defend this for the stock market to hold up. If they start to lose this area, then you're potentially going to revisit all the way back down at the range lows. At that point, you have to ask yourself, will crypto manage to hold its lows, or will it at the very least revisit its lows? And most likely, if the stock market comes all the way back down to 36.47, then the probability is high that Bitcoin will visit 18K at the very, very least, possibly even make new lows. So do keep an eye out on that. This week is going to be critical for the markets. Total 3, we outlined for a long time, be careful with your long trades on altcoins because it is currently in a strong downtrend. You can see lower high after lower high, can't get back out of that range, absolutely struggling to break out of that. And you're looking at your next zone of interest is the mid-range at 347 billion. Lose that, and of course, then you're coming all the way down to 300 billion and possibly low. At that point, Bitcoin is at 18K. The yields, let's quickly look at the yields. So you can see 2-year yield is currently moving on its way up. This increasing yield curve is usually a pressure down situation. So it's pressure for risk on assets. And the 2-year is running up very, very strong over here. Currently, you already have closes higher than what we saw all the way back in November. And you would want to see this top out in order to create a reversal for crypto, or at least an easier situation for risk on assets. So that's the 2-year yield, but still range bound. 10-year yield can possibly move all the way up to 4.25%. And you can see a very, very bullish pattern formation over here is that W pattern, right? W pattern, which means that the measured move would take you all the way up to the previous highs over there, which is in line with what the 2-year is doing. 30-year also has exactly the same thing. You do have the W pattern, which is currently forming, meaning that you're looking at your target all the way up towards that 4.3 level. So keep an eye out on this. If you want to time your entry for crypto, wait for this to top out and start to turn back over. Wait for the stock market to bounce, and that will give you your indication that it's all systems go. Okay, IT Tech says, though, what's going on-chain with the miners? Despite the increasing miner difficulty, they continue to increase their BTC reserves, which is a positive sign for the market. Now, what I want to say with regards to anything that's on-chain and miner related, keep in mind that these things play out over months. This is giving you an indication more for the investors, those who are focused on the next 6 months, not a short-term trader. So someone that's focused on the next 6 months, it's essentially telling you that you should be looking for a potential in the market. And it's in line with this one over here. BTC mining difficulty is silently hitting a new all-time high yesterday. This metric will one day be a leading indicator to price action. Never underestimate the conviction of well-capitalized OG miners to ensure the integrity of the network. 2024 halving will be explosive. And I do still stick with my guns with what I've said around that. I do look at different facets and indicators within the market, but liquidity with the halving cycle could be a powerful, powerful catalyst for the next run, which I only anticipate will really, really take off, as he said, around the 2024 halving. And then you're looking at the market cycle top late 2025 or between September and November. So Bitcoin census, he says, Bitcoin relative long-term hodlers realized loss to exchange is near cycle lows at 58%, which is the perfect event for a cycle reset. It is also important that most people remain bearish. This will likely trigger higher prices in the coming months, which is in line with what I've just shown you as well. Beforehand, I told you about the backwardation and the low volatility and then a drop in the open interest. That is in line with what he's saying over here. That is your signal. More bearish people, whilst you have all these on-chain metrics resetting, creates the opportunity for things to start to shift in the next couple of months, meaning that any dips are essentially for buying, according to this. So new Bitcoin addresses momentum compares the monthly against the yearly average of new addresses to underline relative shifts in sentiment. This indicator suggests that a new BTC bull run has started. I know that's like a super aggressive statement, so don't shoot the messenger. Note the spike after FTX collapse, but growing network utilization prevails. So there you had the big spike after the collapse over there of FTX, and in line with what you can see over here from the hash ribbons. I also marked off FTX. I'll make it bigger. Yeah, you got the FTX saga. So this should have actually been the bottom, at least according to the hash ribbons. You got the buy signal, and the lows should not have been breached. Once you get the blue buy signals, the lows never get breached. But because of FTX, this range broke down and we went lower. But based on what the miners are doing, you do have another blue buy signal, which means now the FTX, which is, of course, a black swan event, you would expect that that level should hold. I have also marked off with the 𝗕𝗬𝗕𝗬𝗏 score, which is basically showing also signs of market strength. You have this area currently, it's been time-wise the same amount of time within the green low band, and you're ultimately looking for that to push on up. And when it gets towards these red bands over here, that ultimately signals where you're nearing the market cycle top. So if you look time-wise, that was basically January of 2021, which is exactly when the market cycle top. It had another spike up into the top in February. And look, basically, you're in the green zone, right? Historically, anytime you're in the green zone, has marked very good accumulation, or at least a good time to accumulate. And you want to be distributing your coins once you're nearing the top section over there. So we're watching that over there. Now, dip areas. Where could price go? Well, I am also watching the CME futures chart over here. CME futures does have a CME gap. So you can see the big gap over there. Basically, what that denotes is that the price opened, because remember, CME closes on a Friday or late Friday, so it's closed over the weekend. Monday, it opened with a strong green candle. Thus, it leaves a gap. Now, it's not 100% probability, but the CME gaps have a very high probability. I think it's in the 85 to 90 percentile range where they have that probability of getting refilled. And that level means it's currently coming in between 19,530 and 20,800. So if you do see a strong sell-off in price into that region, but a very quick reclaim, then that would be a strong signal that that was the dip, basically, and then you have the opportunity for prices to go higher. But if you see price grinding slowly down like that, and then these different EMAs start to cross back over, so the short crosses below the long term, and it's grinding down slowly into this level, then it's probably not going to hold. Then you're probably going all the way back down to 18. So price action is also the way that price moves is very important in your trading. It depends on how quickly price comes into a level and reacts out of that level, as well as how slowly it grinds into that level or against resistance, which is why I've said to you guys before, a lot of people don't know that, but let's say you have a strong level of resistance over there. If you see price grinding into that resistance, most of the time it's going to lead to a mega breakout. The same thing, if price is just grinding into support, it's probably going to break down, which is exactly the best example I can think of is 2018, where Bitcoin went from $6,000 down to $3,000. That was an example of grinding into resistance. So keeping an eye out on that. Super Guppy indicator still is showing that you should hold your longs. Nothing has changed over here. Remember, 15 out of 19 signals gave a positive hit rate, meaning that it worked out with 70. So it's a 78.9% hit rate, and only 4 of the signals before have failed, of which the last signal we got was one of those 4. So the likeliness of this failing 2 in a row is pretty slim. Probability-wise, it's pretty slim. So do keep an eye on that. Okay, looking at the moving averages over here, we have the 50 and the 200. The 50 is the red one, 200 is the blue. I'm on a daily chart. If prices do come any lower, that would be one area of interest. But currently, this is looking like it could be a very decent higher low. So you can see over here, right? You have higher low, and this could potentially be another higher low. Now, where would this confirm? Well, this would confirm if prices can start to get back above 23,954, which is the key monthly level, get back and hold above that. I would say there's a very, very high probability that that was the higher low, and that's going to hold, and we're going to get that one more spike up. One more spike up, we're looking at levels of 26,500 to about 27,500. The levels from last week still remain exactly the same. Nothing has changed with regards to that. We've just been consolidating. Okay, but if you start to break down this trend line over here and you break below that previous wick that we've just set, then obviously look out below, look out to the 200 exponential moving average, which is the daily light blue one over here. Lose that level, that means you're taking out the previous low. So I told you guys as well on the previous shows on Thursday and throughout the whole week, if price does come back towards the 200 exponential moving average on the 4-hour chart, which I'll show you now, it lines up with this level, I would be a buyer of that level. Now, most people are going to have raised their stop losses just below this region over here, which also means that there is liquidity there, of course. So you have to be careful. There could be a scam wick that comes down, takes the positions out, and then reclaims, which is why I don't have hard stops on my spot positions. I have a mental stop. I'm going to be looking for the way that price action gets here and if it closes here, because I don't want to be taken out if there is a scam wick. Remember, I bought this level over here. I don't want to be taken out of that position from what was this 21,300, but I bought it 21.5. So I want to hold those positions. I took a little bit of the profits up here. I re-added them onto the 200 EMA on the 4-hour chart. Okay, and Slurp, what a name, says over here, I think the 4-hour 200 EMA is relatively good trend play here. It also offers good risk to reward. If it fails here, then you can probably leave the market for another 6 months and not miss anything. I think that's a bit dramatic. I won't say I'll leave for 6 months, but essentially what this means is the 200 exponential moving average. In any trending market, you're looking for that level to hold. So if we are in fact about to establish a new trend, then that's kind of the level to watch, which is both on Bitcoin and Ethereum. And that is basically why I bid that level. I'll show you that level right now. There you go. Here's the level. So this is the zone that I took a position on off of the blue over here. Now basically stops go just below that wick. Mental stop, remember, for me. I don't want to have a hard stop and get taken out. Remember, you had the 16K buys. So the people that bought around here, around 16K, would be raising their stop. And we've kind of been tracking that to determine where the liquidity would lie within the market. I would say that now they're probably going to start to, it might be a bit too soon. We'd want to wait for this to confirm. But as soon as price gets above that key monthly level, all these stop losses are going to move from here to here, which means, again, there's additional liquidity over here. And I'd love to still see one more spike up before coming down to take that liquidity and maybe retest the mid-range, possibly even the quarterly level between those ranges just below 20K. So that's what I'm watching. That's the 4-hour chart. Range levels. Here's the range. Very simply put, you have your supporting trend line, range high, mid-range, and then you have your range low over here. Let's take this out. This one's not important. So if the supporting trend line breaks down, mid-range is your next target. You lose the mid-range, and then you're going all the way down to 19K, potentially 18. So it's very simple, guys. If we're going to break out of this range, high, low 1, high, low 2, break out the range, maybe you get a retest onto the top of the range, then you get high, low 3, and most people are going to start to jump in there. You can also see what could be the start of an ascending triangle here, right? If you do get an ascending triangle, remember those have measured moves. It's probably going to take it somewhere around that 29K level. I'm just doing that rough off the top of my head over here. Okay, altcoins. Which ones to look out for if the market is going to play ball and continue on up? Then you have VELA. So James Bull says over here that people came for the VELA airdrop. So yes, there's certainly also wash trading. However, they now have 3,000 daily unique users, just like GMX had. VELA is now in the league of GMX, even when some leave. and he goes through some of the data. There's another tweet over here which does cover the data. I don't want to go through the whole tweet thread. It's a long tweet thread. They look at the, the total value locked. They look at the transaction volume. They look at the number of transactions. Basically, everything on VELA is on the up, which means it could be one to potentially watch. Price-wise, I looked at the chart. Not much price history, but from the little history that you have, it's in an uptrend. Uptrends usually tend to continue until they don't, which means you can bid it until the trend ends. So that's what I'm watching over there. And then you have Inspector Inspo Crypto. Unbelievable. Whales ratio is heading its top again. And he says in the short term, expecting another pump heading to 23.6 or 24 before the next move down. Stablecoin reserves on centralized exchanges is up. Whales ration 1 hour time frame dumped. Inflows are still coming in hard, and BT reserves on centralized exchanges are increasing. So this is for the short-term traders. Do keep an eye out on that. If the market is going to go down, chances are you're likely going to get one more spike. So here's our levels. Let's quickly go into this. Oh, wrong one. Short-term traders, you'll be looking at something like this. You might see one more spike into this area. Let's grab that. Okay, 24,025. If you see price come into that level and fail, so up, over, under, and reject, there you go, stop on the top, and then you're looking to short back down to same level where price is now, and then your next zone is to 21,393. So those are the two zones that I would kind of be looking at. 4 hour, you can see the stochastic RSI is starting to reach there. So there is possibility that it is going to turn back over and there will be a bit more downside. But then higher time frame that lines up with that potentially being an opportunity, right? These are for the spot traders and the investors that are out there. So guys, last but not least, we do have, what is today's date? The 27th. We have 2 more days left, 2 or 3 more days left. I don't know which day the month ends, but that is for the Rolexes. So we have the Submariner Blue and Gold and the Submariner Black. It is up for grabs. Check it out in the link in the description below. Give the video a like, hit the bell notification, and make sure that you are subscribed to the channel. So check out ByBit and Bitget if you do want to participate. ByBit is the blue and gold. Bitget is the black. It's given away on Rand show specifically. So he does the giveaways. You'll have to watch his show, or you can just fast forward to that part where he gives it away. See if it was your user ID. You have 5 hours to claim it. And if you don't, then we give it to the next person the following day. So I will see you all on the next video. I appreciate each and every one of you. Thank you so much for joining. I'll catch you on tomorrow's video. Cheers for now.